Hey, Jack, thanks for joining us today. Over the last week, we've seen the headlines surrounding Russia's invasion of Ukraine and specifically the world's reaction through different, implications, sanctions, and how it's affecting so many different people. And what I've noticed is how crypto has played a part in several different narratives, some positive and some negative. Could you provide a little insight on how maybe this geopolitical, turmoil could change the narrative around cryptocurrencies and digital assets moving forward?
Of course, Carrie. The current geopolitical climate has created a very interesting situation that we are trying to parse and understand its potential impact on the digital assets ecosystem. The main consequence that the West has levied against Russia has been broad international sanctions, such as removing some of Russia's largest banks from SWIFT, as well as effectively freezing the Russian central bank's 500 billion about worth of euro and American dollar reserves that could have been used to at least partially keep the Russian economy afloat during this geopolitical unrest. Almost immediately after sanctions started coming down on Russia, many crypto watchers noticed large jumps in Russian activity on crypto exchanges. For instance, rubles are now the fourth most common currency used on Tether, the largest stable coin by market cap. Other evidence can be found in ruble-denominated purchases on exchanges. For example, ruble-denominated Bitcoin volume reached a 9-month high of 1.5 billion rubles on February 24th, almost immediately after the invasion started. The demand for Bitcoin in Russia is so high, in fact, that they were paying as much as $7,000 in premium just a few days ago, and that's cooled down somewhat, but it still sits around $3,000 to $4,000 as of today. This is attracting a lot of attention to cryptocurrencies and digital assets overall. Some attention is, good, some not so good. Starting off with the pro side, pro crypto side, this shows the potential value of a globalized, hyper decentralized monetary system where centralized powers like foreign governments can't impede on people's ability to conduct digital commerce. It also empowers the argument in favor of a highly static monetary supply for a decentralized currency as a hedge against the devaluation of an individual's holdings in fiat currencies. According to Forbes, many Russians maintain, very significant cash savings. And right now, those are rapidly depreciating in value compared to the US dollar, and even more so compared to Bitcoin and other cryptocurrencies. Usually the topic of hedging against, a loss in the value of a fiat currency is related to inflation, but now we're seeing, that there are multiple modus operandi by which centralized powers can undercut an individual's savings. However, on the flip side, Russia's growing adoption of crypto is also evidence of the potential for bad actors to misuse the benefits presented by crypto. International sanctions against the Russian government and its oligarchy have limited impact in the peer-to-peer transaction structure of crypto. So we can expect, and as I have pointed out earlier, we are seeing more adoption of Bitcoin and other digital assets through which Russian institutions can conduct their cross-border transactions in place of fiat currencies. If Russia is able to restructure its financial regulations such that Bitcoin and other digital assets could be effectively used in place of the ruble in transactions, then international sanctions will lose most of, if not all, of their efficacy. And what impact they do have would end up punishing the 90+% of Russian citizens who can't live their entire lives through Bitcoin or Tether or what have you. So because of crypto, sanctions could become worthless in the near future, and corrupt, aggressive governments could use it as a way of removing any burden imposed by sanctions, mostly to the detriment of the rest of their country. And so that is sort of the main argument against crypto that has been highlighted by the recent events. That being said, there is a case that can be made that moving from the ruble to crypto is much less impactful for the Russian government and its oligarchy than it would be for the Russian people and its small businesses. Russia's current pipeline for access to foreign markets is almost entirely through China with all the sanctions going on. And those sanctions levied against the Russian government and many of its leaders have forced them to transact using some form of uninterruptible transaction method. Cryptocurrency is an obvious choice to fill that necessity. However, we've seen that the Chinese government, as well as many of Russia's allies like Iran, are generally opposed to the use of crypto, especially in the case of payments in place of fiat currencies like the yen or the ruble. So making major investments and purchases in current countries that are, still willing to transact with Russian institutions could be quite difficult if Russia is forced to transact through crypto in place of dollars and euros. However, on the consumer side, the developing consumer level sector of crypto in Web3 might enable cross-border payments for small businesses that are operating out of Russia. In fact, these cross-border payments between small businesses in Russia and China have already been taking place for many years now, mostly through Tether. And so we might actually see crypto as a relief valve for Russian citizens and small businesses, but not for large institutions. In summary, in summary, the events in Ukraine are likely to further cement people's existing opinions on crypto. Those who are in favor will probably use the arguments that I listed, where it could allow people to separate their financial freedoms from centralized powers who can interfere through inflation, geopolitical repercussions, asset seizures, etc. Those who are already against crypto will probably point to the arguments that I made against the current situation, where crypto is enabling aggressive countries and corrupt leaders to circumvent sanctions and allow them to continue their malignant actions. If anything, the biggest impact that we are likely to see would be further Russian adoption of crypto as a means for foreign financial activities, and it will probably be localized to Russia. It's possible that adoption would be overweighted in small businesses and regular Russian citizens, and using decentralized currency as a reserve currency for foreign transactions at the moment presents a significant hurdle for the Russian central bank and large institutions, and that hurdle will likely mute their ability to remove the consequences of the Kremlin's actions in Ukraine. As for the potential impact to price action in the digital assets economy, further adoption and actual use by retail investors in the fifth largest economy in Europe could be a catalyst that helps drive a really solid push upwards. However, institutional adoption has proven to be a very significant component of recent price action. So if the previously mentioned hurdle stands, retail-driven gains would end up being limited by a lack of institutional investment and use following.